What's going on, guys? Everyone hates the choppy days until you get slammed over the head with a trending day. What exactly does that mean? You would be surprised that more traders tend to lose money when seemingly there's no real pullback, right? I mean, let's be realistic. After the first 5-minute candle of the day, right? If we look right here where the market opened up at, after this first 5-minute candle, first 5, 10, 15-minute candles, we kind of put in this floor. If I was to draw a line here, essentially you could have closed your eyes and bought long anywhere, held on as long as you were position sized accordingly, not playing something like 5, 10 mini, 15 mini contracts, and essentially held all day and made money. So what tends to happen on a true trend day is that a lot of traders either A, miss the potential setup that aligns with their strategy, B, does not trust the strategy because the previous day or maybe the day before that was a little choppy, was range bound, maybe didn't work out. So now today they're trying to be extra cautious and they fail to take the setup. Lo and behold, if taken, would have worked out. And now what it does is create a bunch of FOMO. Creates a bunch of FOMO that tends to put you in positions that you normally don't take. Tends to put you in trades that aren't in line with your process or your system. And what that does is then you start looking for reversals. You start looking for the short when you should be looking to play the pullback, play the bounce. You start looking for each candlestick to put in a new high, and you rush in and you take that new high because the market keeps pushing up. And when it pulls back 20 points, stops you out, and then 10 minutes later, it's back up where it needs to be. So realistically speaking, again, this market remains to be true. The first 15, 20, 30 minutes of the market remains choppy. A lot of up and down, back and forth movement. To be honest, I would say, it'd probably be smart if you sit on your hands at least 15 minutes, 100%, but if not 30 minutes. Okay. And then start kind of looking for those trade setups. So if you're having some trouble off the open, again, if you have a system, you have a way to trade where you're making money and you're doing just fine off the open currently, don't change a thing, right? I'm not going to sit here and tell you to not trade the first 15 minutes. If, the past 2 or 3 weeks, you've been making money within the first 15 minutes, right? That doesn't make any sense. But if you look at the first 20 SMA setup that happened here at 10 a.m., we got the confirmation. It quickly popped and then pulled right back. So if you were looking for too big of a price target on the first initial pop, more than likely you got stopped out. However, if you look at the high price here, 20,291 popped all the way into 20,305. It was around 14 points. Okay. So if you were looking for sub 10 points, you should have had this order already sitting here because it did pull back before it confirmed. You should have had an order sitting there right around that 20,291, 292, the latest. And as soon as price action confirmed that, you should have been in that trade to take it for a little bit of ride. Now, if you missed that and you watched the market kind of just scream to the upside here and you kind of missed that 30-minute opening range. So if you look at the 30-minute opening range, that was here. Okay, let me put you that 30-minute opening range. That was here. Let me drag this down just a little bit so it's a little bit more clear. If you notice, the 30-minute opening range high was sitting at 20,299.5. Okay. When we confirmed, we went up to 20,305. Now, this was a very touch and go kind of situation. I know I took this trade. I know there was a lot of other traders inside of Evolution Traders who took this trade. And I know there's some traders out there that probably got stopped out on this same trade. Why is that? Well, if you were looking for anything more than 5 points and you market ordered in, or maybe you were late to pull the trigger, then you got caught in a pullback from, let's just be realistic here, 20,299 all the way back to 20,284. So if you had like a, some people are running a 5-point or 10-point stop loss, then more than likely it stopped you out. And then, lo and behold, 10, 15 minutes later, not only would you have made money, you would have made a lot of money. On those 30-minute opening range breaks, for the past 16, 17 days, it's hit for at least 5 points on the first to go 15 times. So those odds are really, really good in the 90 percentile there, where as long as you're not looking for too much more than 5 points on the first push, you should get that more times than you should not. Okay. Once that trade kind of gets away from you, well, then what happens, right? You kind of feel like maybe I missed this trade. Now I missed this trade. Market's pushing higher, and maybe you try to short, right? That's what tends to happen with a lot of traders. And then you go short again. And then maybe you catch a little bit of this down move. So now you feel like you're kind of reading the market. And then next thing you know, the market traps you, right? It looks like this is going to continue to come back down here. And maybe that was just a little bit of a runoff there. And then it pushes to the upside. So again, what you need to do, again, a lot of traders, will complain when the market is chopping around for 1, 2, 3 hours of the day. But then when it gets to be a trend day, they don't necessarily know what to do. As soon as you identify that, hey, this is not a trend day, this market is clearly pushing to the upside, what you then need to do is look at the 30-minute opening range. You need to look at your initial balance, which is the first hour of trade. And then you need to see where are the potential pullbacks where I can get a better price for a continuation bounce. We're not looking to go against trend. Okay. Now, if you're going against trend, it's because maybe your strategy, right? Like, for example, here's a perfect situation here. At 12:15, this is during lunchtime, we get a 20 SMA trade set up to the downside. That low price is 20,375 and it shoots down to 20,368. If you had an order sitting here, you should have taken at least 5 points. Now, again, why not 10? Why not 15? Why not 20? Why not 30 points to the downside? Because this is a clear uptrend. We're not trying to look for big extravagant moves, and we're not trying to jump into a market order 3, 4, 5 points down the road when we know that this is just a pullback into rising support. And all I have on my screen right now is just a 20 SMA. You can see this is holding here, overshoots it here, pops, holds, looks like a big flush. And all this was a back test to the initial balance. Your initial balance highs were here. Notice how we pull back to initial balance. Notice how we pull back to initial balance. Notice how we bounce. So the clearer trades today were definitely to the long side. Allow it to pull back, bounce. Allow it to pull back, bounce. Allow it to pull back and bounce. And if you're looking for those, I've got a short here because the market's coming all the way back down. I've got a short here because we're going to take out this swing low. That's where you start to chop yourself up. So again, a lot of traders want this big movement. They want market to continue to go to one side so it makes it easier. But the human psychology tells you opposite. The human psychology is telling you, no, yesterday was choppy, the day before was choppy. Don't trust the move. No, yesterday, when you try to go long at the breakouts, it just pulled back on you. No 2 days are alike. You can have a string of days that do kind of the same things, but you can't ever tell yourself that, well, because yesterday and because the day before was choppy, I'm not going to trust my system and my edge today. Okay? Because now you're trying to be smarter than the market, and truth be told, no one is smarter than the market. So when this should have just been a very easy day to the long side, I'm willing to bet, and let me know in the comments if you had a very difficult time today. If you had a difficult time today, I don't think necessarily it was the price action, and I don't think it was your strategy. I think it was more so of the mentality going into this, the ego going into this, maybe losing a trade within the first 15, 20 minutes, and then wanting to feel that FOMO like you need to get it back. Okay. Again, if you're not operating a good risk management system, where you have a set of rules where if I lose 2 trades in a row, I've got to stop trading today. If I win 2, 3 trades in a row, I've got to stop trading today. You're operating blind. Okay. Just sit here and think that you can just catch every single move and want to be a part of, well, the market's pushing higher. What's the next best spot to go long? You should know this already. You should know this. Now, again, even if it's day 1, day 2, day 3 of you learning how to trade altogether, take a deep breath, focus on one strategy, focus on one setup, get consistent with that one setup and one strategy, get some payouts, put some money in your pocket, and then start expanding. But a lot of times it'll be, traders maybe miss the 20 SMA long, and then they're watching price up here asking themselves, should I go long or should I go short? When realistically, what is your strategy telling you? Because at this point in time, I'll just point to a random point in the chart. At this point in time here, anything in here, my strategy is not telling me to do anything. My strategy was telling me to be long here. My strategy was telling me to be long here. Now when price is trading way up here, I don't have no edge. I'm just guessing and trying to ride some type of momentum and hope that I get lucky. Hope doesn't pay the bills, not in this industry. Okay. So again, I hope this video kind of helps you guys. If it did, if something kind of stuck out and resonated with you, make sure you guys hit the like button. If you guys need Apex accounts, 80% off, $85 activation fees, that link is down in the description box below. If you guys are looking to join Evolution Traders, kind of get some live intraday and daily commentary, get some private lessons that are not on YouTube, and join in and start trading with the community, that link is also down in the description box below. And I'll see all of you guys on the next one.